Costco stock, ticker symbol COST. This stock is down roughly 20% year to date, and Costco will present their quarterly results this Thursday. And since other companies like Target and Walmart went down big time after earnings, I think it's very interesting to see what is going to happen with Costco stock this Thursday. In this video I will show you everything you need to know about Costco stock. I will show you what Costco does, and I will show you my fundamental analysis to see if Costco stock is a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analyses every week, where I will tell you everything you need to know about the stock market. So, what does Costco do? Costco Wholesale Corporation operates an international chain of membership warehouses, mainly under the Costco Wholesale name, that carry quality brand name merchandise at substantially lower prices than are typically found in conventional wholesale or retail sources. The warehouses are designed to help small to medium-sized businesses reduce costs in purchasing for retail and for everyday business use. Individuals also may purchase for their personal needs. Costco has three categories, which are food and sundries, non-foods and fresh foods. Next to that they have other businesses like gasoline, pharmacy, optical, but also e-commerce, business centers, travel and so on. Costco operates in different countries, but US is by far the biggest, followed by Canada. And all other countries are together similar to the size of Canada in terms of sale. When we check the historical increases in net sales, we see that most of the growth is coming from outside the US in terms of percentage. And it's the same with the comparable sales growth. But overall, I think this is something I really like to see. There are double-digit growth numbers, but these are also influenced by the lockdown periods, of course, so that's something to keep in mind. One of the things that I do like to see is the constant growth of total number cardholders worldwide for Costco. It's growing at a steady pace, which is something I really like. More and more people are getting access to the products, and of course pay an annual fee for the card. The total amount of stores is also increasing nice and steady, so that's also a good thing. They are growing in comparable sales but also in total amount of stores. This is the perfect way of generating more revenue. And now that we know everything about Costco, it's time to check the historical stock price performance and compare it to the S&P 500 and also to Walmart and Target. On the 5-year chart we see that Costco had a return of 155%, while the S&P 500 only had a 65% return. Walmart a 56% return and Target a 182% return. So you easily beaten the S&P 500 on the 5-year chart and almost tripled your returns compared to the S&P 500 and Walmart. On the 1-year chart we see a 12.8% return for Costco, a minus 4% return for the S&P 500, minus 13.5% for Walmart, and minus 31% for Target. So Costco is again the winner here. On the 1-month chart it's getting interesting. Costco is down almost 25%, while the S&P 500 is only down 7%. Walmart is down 22% and Target is down 36%. So all stocks got beaten down, and that's mostly because of earnings and fear in the market. So, with the earnings coming this Thursday, I think it's the perfect time to check the fundamentals because this stock is down 25% year to date already. Costco is a 190 billion market cap company with a PE ratio of almost 35, which is really high compared to the competitors, which we will check later in this video. But I don't like the PE ratio being this high. In this graph we see the stock price is going up a lot and EPS is also going up, but not in the same pace as the stock price. Meaning the PE ratio is getting higher every year. And since 2013 the PE ratio didn't get below 20, which is the maximum in my opinion you want to pay for these type of companies. So this tells me immediately that this company is massively overvalued. When we check the margins, we see that operating margin is at 3.8% and profit margin at 2.6%, which is below my minimum of 10%. But since this is typical for the industry, I don't think it's that big of a problem. But the thing that you want to see is that they are increasing. And in this graph we see that gross margin is decreasing, but Operating margin and profit margin are increasing, which is a good thing. It takes time, but I think they do a good job here. Return on assets is sitting at 8.5%, which isn't the best, to be honest. You want this number to be at least above 10%. Return on equity is doing great at 31%. Return on invested capital is also looking really good, but keep in mind that these numbers are influenced by the lockdown periods. The 12 trailing month revenue is sitting at 210 million, and Costco has a 15.9% quarterly revenue growth year over year, which is a good thing. In this chart we see the revenue over the past years. It's going up nice and steady, which is something I really like about this company. This is driven by the comparable sales growth and also opening new stores. When we check the balance sheet, we see that Costco has 12 billion in cash and only 9 billion in debt. So they are capable of paying down all their debt with their cash, which is something I really like about this company. For me, it's very important that free cash flow is growing, because it's used to pay down debt of course, but also to buy back shares, pay dividends, do acquisitions, opening new stores and so on. In this chart we see that it's going up. Keep in mind that free cash flow went up a lot during the lockdown periods. So a question to ask yourself is if Costco is capable of growing in the same way as during these periods. A thing that I don't like about this company are the shares outstanding. You want a company to buy back shares, since this will increase the EPS and makes it more easier to maintain the dividends and of course increasing them. In this chart we see that Costco is diluting you as an investor by issuing more and more shares, meaning your shares becomes less valuable each time they do so. And since we're talking about dividends anyway, let's check the dividend scorecard. Right now, Costco has a dividend yield of 0.84% and an annual payout of $3.6. The payout ratio is sitting at 26% and the 5-year growth rate at 12%. They grew the dividends for 6 years in a row. To me, the dividend yield is a bit low compared to the payout ratio, and the 5-year growth rate isn't that bad, but if they don't issue more shares but focus on buying back shares, it will get more easier to increase the dividends in the long run. Right now, the payout ratio will go up every time they issue more shares, so that's something I don't like to see at all. The last thing I want to discuss are the competitors versus Costco. I included Walmart, Target and BG Wholesales. In terms of valuation, Costco is definitely the loser here. All other companies are trading at lower valuations and Costco is overvalued in my opinion based on the PE ratio. A thing that I do like about Costco is the revenue growth year over year and the compound annual growth rate. All numbers are higher versus the competitors. Net income compound annual growth rate is lower versus the competitors, so that's something to keep your eye on. Free cash flow compound annual growth rate is again the highest with Costco. All companies have similar margins and return on equity, return on assets and return on total capital doesn't have a real winner in my opinion. When we check the balance sheet we see that Costco is the only company that is able to pay down all the debt, so for me they are the winner here. The last thing I want to check are the dividends. Costco has the lowest dividend yield, payout ratio is really similar to each other, but the dividend compound annual growth rate is really higher at Costco. The competitors did grow the dividends for more years in a row. My final conclusion on this company is that I think it's overvalued based on the PE ratio and also because they issue more and more shares every time. In my opinion, this stock is a sell based on the valuation and lack of share buybacks. All other fundamentals are looking good in my opinion, but for now I do think there are better deals in the market. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.